stock market and put it back together so that it makes sense for you. Going way back here to the company that Thomas Edison put his imprimatur upon more than a century ago, and now it's led by a fine fellow with a Clinton-like hairdo named Jeffrey Immelt. Talking about General Electric, the big general. Not a great report today. Revenue came in a little bit shy of what analysts were looking for. It was down 7.9% to $37.97 billion. The street was looking for about $40 billion. Not good news for GE. The shares sold off immediately in the morning, but in the afternoon, things turned around and people bought the heck out of the stock. Ended up about unchanged for the day. Good sign when a stock can take a beating in the morning and come back in the afternoon like that. So General Electric still hasn't cracked 20 bucks. It was a $40 stock back in 07 at the peak. Another big earnings story today that you couldn't avoid was Google. Google has just creamed it, knocked it out of the park in the past, 20 occasions or so when it reported quarterly earnings. Not so. Larry Page, co-founder and CEO of Google, trying hard to be a Jimmy Page, but finding that, well, there's no real stairway to heaven and all that glitters is not gold on the internet. Google, earnings per share, $9.50, up from $8.75 a year ago, but analysts wanted $10.49 from Larry. Couldn't do it there. Sales up 25%, $10.5 billion for the quarter. First time ever above $10 billion for the quarter for Google. But that's like saying I made a lot of money because I'm holding people's money to go to the grocery store. Net revenue, that's after you pay your partners and things like that. That was $8.13 billion versus $6.37 billion a year ago, but analysts wanted 8.4, came in shy. So, hey, Google's choking. Oh my gosh, freak out. Not really. Google's growing way beyond what search is. Google's growing the Android platform. In fact, that was part of the reason for some of its hiccups in the last quarter was buying the Motorola hardware, which kind of puts us in competition with some of the people that want to sell its stuff. It wants to be what Steve Jobs' last creation at Apple was, the iPad. It wants to be everywhere. It wants to have the search on mobile. And mobile search does not get as much CPM as you get on the internet, on your desktop, believe it or not. So they're going to have to grow it out, but they're probably going in the right direction. They can't just chill out, though, like Snoop Dogg, because they do have stuff on their tail. They've got Bing, and don't laugh, it's a search engine, and it's got Facebook, of course. But also, think about it this way. Back 10 years ago, Microsoft owned the desktop. Well, Microsoft still owns a lot of the desktop, but it's ceded a lot of it, of course, to other companies and to open source. Facebook, now when I opened up somebody's profile and it had the timeline thing, and I thought, gee, I'm vastly unfamiliar with the way this looks. I don't feel connected to this product anymore. So even Facebook, which has a lock on 700 million people around the world, could also lose it. And if you don't think that you can get your butt kicked, even though you had the first place because you were a first mover, just ask this guy right here. All right, I'll leave. Jerry Yang from Yahoo. Home sales. Home sales are kicking a little bit, and there's not as much stuff for sale. That means home building stocks are building a big time head of steam. Back in October here, you could have picked up this ETF, which tracks the entire index, for $12.50. You could have cashed out today for about 19 bucks. Not a bad return. Names like Lennar are up about 100% in that same time frame. Why? Well, you've got a shrinking inventory of houses out there to sell. People are yanking them off the market. That's called shadow inventory. It could come back on when markets kick up. But look at this, inventory, existing home inventory down since January of last year. We've got months of supply now down to 7 months, which is about where we were in the middle of the housing boom. And what can sustain the housing picture? A prettier jobs picture. And we've certainly had that. This is the initial weekly unemployment claims. This goes back to 1971, folks, when Intel came public. Over here, since the recession, that has been coming down and been down solidly in the past 7 months. So jobs are improving. There's fewer houses for sale. There's good reasons that home builders could continue to go up. More tech earnings. We just had earnings like fireworks on the 4th of July. Intel still kicking out a 3.5% yield, baby. But this stock tagging new highs above $26 per share. Intel blew away estimates. And if you're sweaty and happy, or you're John Madden or Steve Ballmer, you were happy about Mr. Softy. Microsoft knocking it out of the park. The stock was up 5.76% today. Huge volume. Money's been flowing into Microsoft for the past couple of weeks, and for maybe the insiders knew something that we didn't. Microsoft is on its way now to 30 bucks a share for the first time since, I don't know, since Chad Ochocinco was named Chad Ochocinco. So, hope you guys have a great weekend. Stocks are popping. GE took a licking, but it came back ticking. You should too.